So I'm going to put you in a very tight spot. I'm going to ask you 5 top picks among all this plethora of companies that we have across GCC or MENA. So what would be your 5 top picks?
Today we interviewed Charles-Henry Monchau, the CIO, the Chief Investment Officer and Managing Director at Al Mal Capital, part of Dubai Investment Group. And he basically told us why does he see a turnaround in Dubai equities, what would be the reasons for it, where does he see value in Saudi equities, and you don't want to miss it. His top 5 picks for the next year.
We've seen this outperformance in Abu Dhabi index. We've seen about 20% gains in the past 1 year or so, basically because of banks, and they have been rallying because of the merger news. And Dubai, on the other hand, we have seen this underperformance because, in a way, real estate has not played a catch up with its peers as far as the other banks are concerned. So how do you view both these markets, Dubai versus Abu Dhabi?
The way we first look at the UAE market is not really Abu Dhabi versus Dubai, it's really from a bottom-up perspective.
Yeah.
But now if we look at the performance of UAE since the start of the year, first, performance has been very decent.
Yeah.
So obviously now we are entering into the Ramadan summer season, which is much lighter in terms of volume activity. Performance has been decent, so there is some profit taking. So it's not a surprise to see some kind of, let's say, of consolidation on this market. But once this Ramadan period is over, we still believe there are a lot of opportunities on the UAE market. It is cheap. And when you were talking about Abu Dhabi versus Dubai, obviously it's probably Dubai, which is the one with the best opportunities. As you rightly pointed out, when you look at UAE, it's very important to look at banks versus real estate. On the banking side, so you mentioned FAB. FAB is probably, let's say, on the upper side of the valuation. We still like a bank like Emirates NBD, for instance, still very cheap. Despite the 45% run on the stock, trading at 6 times PE. Price to book is 1.1 compared to 80% ROE. You have this FOL catalyst, which is there to unlock value. So it's still possible to find some interesting stories within banks. Now the true question for the Dubai markets and the UAE is real estate. So when you look at real estate, again, it's real story by story that we look at it. Coming back to your question, generally speaking, UAE, we like the market. We believe it's cheap. There will be some catalysts down the line. Again, it's stock by stock basis, but I think the difference between last year and this year is that Dubai markets it's very probable that the upside potential is better than Abu Dhabi.
So would you focus on real estate stocks now in Dubai?
We start to have some names, definitely. So I mentioned Emaar Malls. We still have Emaar Properties, on which we are ready to add if needed. So definitely we look at real estate names.
Your perspective would very much depend on the underlying property outlook, the real estate outlook in Dubai. So how do you see that?
Well, the thing is that the stock market usually anticipates a turnaround. So I'm not saying that there is currently a turnaround in the real estate market in Dubai, but you will see stock moving ahead of the recovery rather than the other way around. And again, there is a price for everything, and now we are getting to levels where really the valuation are very attractive. We believe that as global emerging markets managers allocate capital among different countries, they really start to find some good value in UAE and Dubai especially.
So as they say, stock market is the good barometer of economic performance.
Yeah. And the economy is also going to improve. As you know, GDP growth in Dubai is going to accelerate between 2019 and 2020. There is obviously the Expo, which is coming down the line. So I think there are definitely some catalysts, ahead of us.
Shifting focus to Saudi markets, that has been one of the top performing markets in the region because of the MSCI upgrade that will happen in June. We've also seen 2 tranches of FTSE emerging markets, the money that has gone in, Saudi equities. How do you see that market? Is there any value left? Because I hope it would not be a story that we saw in Dubai and Qatar when the actual emerging markets upgrade happened. People just people just booked profits and ran. Yeah. So would that be a case in Saudi as well?
There are good things and bad things. First, definitely, Saudi is a flow story. We're talking about $60 billion of inflows which are going to come to these markets. We are still very far away from this. Last year it's about $1 billion only came, so we are very far away from these targets. Saudi markets, which is by emerging market standards, a market which is has decent liquidity, only has something like 3 or 4% of foreign ownership, so it can only go up. That's the good thing. And also, the interesting thing is that in terms of Saudi compared to the rest of emerging markets is definitely a destination of capital for international investors because it provides diversification. Yeah. We saw this last year. Yeah. Last year was a very bad year for emerging markets and a very good year for Saudi. It's not just about the flows, it's because you have the dollar peg. The fundamentals in terms of fiscal stability or debt are better than many emerging markets. So these are, let's say, the good news about these flow stories. The bad news is that obviously flows have been concentrating on some mega caps and large cap, and these mega and large cap are starting to get very expensive. So obviously this creates a risk because when you have high valuation, obviously it creates downside potential. But in terms of, let's say, the Saudi story, on the other hand, there are some very attractive opportunities more on the mid-cap space. So if you have this stock-by-stock approach, you start to find very interesting stories within Saudi markets, which are less related to the flow stories, but more related to the improvements also in terms of economic sentiment. Think about stocks like Extra, for instance. On the consumer side, there are many stories of consolidation in Saudi, and this one is indeed an interesting one with many catalysts. So it's not definitely, the message here is that when you look at the region, will it be UAE or Saudi, is not short of very interesting opportunities with growth and valuation, which is decent compared to these growth rates.
Investor, for example, if he's late to the rally in Saudi, now it will be a little bit more difficult in terms of names that he wants to choose on, specifically with the mid caps or small caps. Any specific sectors that you're overweight on in this market?
So again, it's the stock by stock approach, but you refer to a very interesting point. Is what about an investor who is currently heavy loaded on Saudi? What should we do? Maybe should we go back to cash? The way we look at things is really we look at the region as a pan-MENA region, and that's the beauty of it. You have 6 GCC countries, 4 out of 6 are investment grade, so very high quality. And then you also have, let's say, non-GCC countries like Egypt, for instance. And here is a very good balance because if you take a country like Egypt, obviously it's less liquid. The sovereign quality is not as good, but we're talking about 1 million people country, which is adding in terms of population, a population of Dubai every year, so very high growth. And here we are finding a lot of very attractive investment opportunities of valuation. We are talking here about a PEG ratio of 0.6, so if you compare PE to growth, is definitely very cheap. So here, the way we look at it is, okay, once Saudi becomes too expensive, you can move a bit of capital into less expensive countries where you can also find a catalyst. If you're coming back to Egypt, it's full of catalysts. You have the story of decreasing rates, tourism recovery. They found out a lot of gas. So there are a lot of let's say catalysts which are helping to unlock value in some stocks. So again, looking at the region, I think for investors, diversification is the name of the game, as you know. And here, it's possible within MENA to build a portfolio which is made of highly liquid, high quality GCC stocks, paired with some, let's say, less liquid, but higher growth stories in countries like Egypt, for instance. And this is the way we build portfolios.
So I'm going to put you in a very tight spot. I'm going to ask you 5 top picks among all this plethora of companies that we have across GCC or MENA. So what would be your 5 top picks?
Emirates and BD, definitely, because here we have visibility, there is catalyst, there is valuation, and as you mentioned, earlier, banks remain, a top spot. So that's will be number 1. We like NMC Healthcare, so that's London listed, but we see it as a UAE story. We typically like, that kind of growth stories where, suddenly you have, for let's say non-fundamental reason, a pullback in the stock, which enable us to buy the growth story cheaper, and then later on take advantage of the recovery. In Saudi, we like Extra for reasons mentioned earlier. It's the best play to be positioned on consolidation story in Saudi. We also like the consumer finance division that they are rolling out, which is going to help on the growth sides. So that's stock number 3. The 4, I will then add a story in Egypt with the EK Holdings. That's a conglomerate where fertilizers and materials are the biggest parts of the growth story, but they also discover some very high reserve of gas recently, which is helping the stock. In terms of valuation, we're talking about a stock which is trading at 11 times PE, but you have almost 30% of the market cap, which is in cash and liquid investments. And in terms of compounded average growth rates, we're talking about 25% plus. So in terms of valuation, the PEG is definitely very attractive. So that's 4 stories. Maybe if I can add the 5th one, we haven't talked about Kuwait. So we like HumanSoft in Kuwait. We like the Kuwait story, which is also a flow story. But indeed, because of these overhype on the flow side, many stocks in Kuwait are expensive currently, especially the banks. So here it's definitely a decorated story. So HumanSoft on the education side, education is a sector that we really like. Last year it also got punished for, let's say, non-fundamental reasons. I know it's coming back, and it's a super high quality story, very high dividend yields, decent valuation, and we definitely believe that the stock can recover going forward, and that's one of our topics as well.